NFP data ahead, here's what to look for. The recent run of US data has been fairly negative, but it's been soft data points that have really been coming in lower. Look at the S&P Global Services in contractionary territory. A lot of that was concerns over tariffs. University of Michigan sentiment final print, 64.7. But look at those inflation expectations, 4.3 for the 1 year and 3.5 for the 5 year. Record highs in terms of inflation expectations, but there was a Republican-Democrat split. Republicans saw little to no inflation, Democrats saw high inflation, so that did skew the data a little bit. And US consumer confidence coming in below market's minimum expectations. So what will be important for the non-farm payroll print is if we see, and PCE roughly okay, so there was no major worries with that. What will be important for this non-farm payroll print is if we see the headline coming in 30,000 or lower, if we see the unemployment rate coming in at 4.2% or higher, and if we see average earnings coming in at 3.9% or lower, that will surprise markets. And markets will be worried that there's a big dip in the US labor market, and that will likely see a very strong reaction in the dollar. You'd expect further expectations of interest rates to materialize, and I would look for euro dollar upside if we see a really big miss in the data. If we see the contrary output, if it comes in 300,000 plus, unemployment rate 3.8% or lower, average earnings 4.3% or higher, then markets think, okay, well, that bad data, we've had soft data. The hard data here is great, and that means the Fed, no rush to cut interest rates, and you'd expect a sudden sell-off in the S&P 500. So that's what I'd expect. I think I'll have greater conviction with the euro dollar upside on a miss, and I would expect S&P 500 selling if we see a strong data point, if we see strong jobs, because that means the Fed will be higher for longer, and that should support more equity selling. Okay, folks, that's what to look for tomorrow's or Friday's NFP on the 7th of March.